Hey guys, welcome back to the NFL Players Podcast. I'm your host, Zach Miller. As today is 4/15, it's normally tax day, so I know myself was making estimated tax payments for 2021, so I got to talk about taxes again. Last time we talked about kind of what an active player can do with their taxes and tax strategy, tax planning. So this week we're going to talk about what a retired player can do. So there's so much strategy still left out there, and the game's not over. You actually can still do a ton of stuff after your career is over when it comes to tax strategy. And so much of that is because of what you've done on the field and taking all that human capital and turning it into financial capital. I tell myself every time I make the estimated tax payments that it's a great thing. It means you took all that human capital, as a football player, turned it into financial capital and then invested it so it could grow. And so, all those dividends, all those payments that come out and capital gains, those are good problems to have because it means you realized your potential and turned it into financial capital so that you can use it to do fun things. You can use it to provide for the ones that you care about. So that's the ultimate goal there. And so before we kind of dive into what some of the strategies are that I've personally used once I was done and really contributed to my net worth, I just want to mention the whole Aaron Donald thing. And obviously it's early and it's really early in what's going on with that. But as an NFL player, as a pro athlete, you have a target on your back. People want to challenge you, whether they're, jealous, envy, they just want to see how tough you are. And so it doesn't matter if, who's right or wrong. If you do get into those, whatever happened in that situation, you're going to look like the bad guy in the media. You're going to look like the one, and they're going to blame it on you and they're going to sue you. And it's as much as you can help it, you got to try to stay out of those situations. And obviously I have no details about what happened. I just know that, personally as a player, hanging out with my buddies, hanging out, going out at night, there's multiple instances where the group of friends I was with, my close-knit group that I went out with, there were people, other guys at the bar that knew who I was and they want to challenge me, start something. And, luckily I had the people around me that, were able to kind of get me out of the situation. And you got to make sure you surround yourself with the right kind of people that keep you out of trouble. It's hard when people can say whatever they want this day and age and there's no repercussions. But it's the reality of the situation. So surround yourself with people that, look out for you. So as a retired player, what is a financial strategy that actually contributes and can save you in taxes? This is obviously you paid so much money in taxes as a player. You can really as your tax bracket comes down post career, whether you're in a second career or just relaxing, enjoying the fruits of your labor, you can do a lot of strategies. And so one of the ones that a lot of people, don't do is, if you have availability to have earned income, you can continue doing backdoor Roth contributions. And so some of the ways that, any earned income can allow you to do that. And then like we talked about last time, you can keep doing those backdoor Roth and building that Roth account, that Roth IRA account. And so that's really a massive amount later. And so that's one strategy. The other strategy is just like that is if you do have a job that offers a Roth 401k, the reason a lot of people don't contribute and max out their 401ks is because of cash flow. They just can't afford to do it. And so, if you've done it the right way, had the right advice when you were playing and saved a ton, you don't have cash flow issues. So you can max out those retirement accounts, this is general advice, but you can really decide at what tax rate to, go ahead and contribute to a Roth account or what what your, marginal tax rate is. So then maybe you are deferring into a regular individual 401k, but you can really get into the details on that aspect. And then the other is if you don't know what a HSA, a health savings account is, the NFL does have a HRA, a health reimbursement account. The problem is it doesn't grow with inflation. So each year it's, each year goes by, it's actually losing its purchasing power. So if you have an option to get into an HSA, you can contribute to that, and that's triple tax free. Goes in without taxes, comes out without taxes, and grows without taxes. So that's one of the best accounts that's out there when it comes to reducing your taxes. The other one that comes up a lot is you have every year you play, you earn more towards a pension benefit, and you can take that as early as 45, but you have to pay penalties if you do that. Really, it's kind of a 55 or 65 decision, but you need to take that into account in conjunction with your other investments, because that is like a high quality bond. That pension is like a high quality bond in your portfolio. And if you're ignoring it, you might not be taking, might not have enough of an equity allocation in your portfolio. So if you don't know how to value that, it's not that hard. Well, I think pretty much any finance undergrad could do it, but it's something that should be in part of your plan and not ignored like a lot of financial advisors do, especially the brokers. And then at the 401k, the NFL 401k is great. Huge contributions you can make every year, immediate tax savings, and then at 45 you can roll over that to an IRA and really use it and you could possibly use it as a self-directed IRA and put tax as inefficient assets inside of it. And so there's just a lot of tax planning when it comes to all the benefits you earn as a player, that you really have to have someone that knows them really well so that you can maximize your wealth. Some of these things are just little things, but added up together, they really add up, massively to your net worth. So all of these things are, things I've planned for myself, things that as a retired player, I made sure that I maximize or optimize as best I could. And I see so many other guys I've played with that just aren't taking full advantage of all those opportunities that are out there, and essentially just, leaving money on the table. It's basically free money if you have the right kind of financial advice, the right kind of tax planning. Another tax strategy that I just see a lot of people miss, and it's just, it's a really simple one, is to donating appreciated securities rather than donating cash. And, like myself, that was lucky enough to play during such a strong bull market, you have appreciated securities you can donate instead of cash, and then you get the tax deduction, and there's not a tax liability attached to that. And then you could also do that through a donor advised fund where you donate the appreciated securities, and then the donor advised fund, you can direct that money to the charity, and they will give the cash to the charity if they can't handle the appreciated securities. So, it's just a smarter way to give. And it's, unless you have a good advisor, unless you kind of know the strategy of a donor advised fund, it might not make sense. But, trust me, when you do the math, you're able to make more impact because you're able to give more and pay less in taxes at the same time. So with this, kind of these tax tips for retired players, I'm going to actually put a link in the show notes, and then also it'll be on the website to go ahead and download. These are the five, basically the 5 tax strategies that I did once I retired that, most added the most to my net worth. And that's, they had a huge impact where I was able to take advantage of these tax strategies. So it'll be just a short, real simple, easy to understand, the 5, best strategies you can do as a retired player to really save on your taxes. And so I've actually had a really interesting question lately. It's actually how do I personally invest? And you look around and you see so many advisors that don't invest like their clients. They don't own the funds that they put their clients in. And really investing comes down to keeping expenses low, taxes low. You should always have taxes in the back of your mind when you make investments. So that's what I do with my personal strategy. As passively as I can implement. I already have a lot of exposure to real estate in my home, so I don't really take a lot of risk in real estate. So a lot of it's public equity market, and then there's this common misconception that just because you have a lot of money that you should be ultra conservative and only own bonds, and it's ill advised, because there's once you have the right financial structure and you have a protective reserve with your downside protected, you can actually take, and how much those future cash flows and all those priorities are accounted for. You can actually take more risk in the equity market and be riskier because you're investing for generations. And so, that's what I do with my own plan. Volatility is not scary to me. Uncertainty is always going to be there, and you have to account for that and have a personal hedge in the form of your protective reserve. So that's what I do. And then I take, probably a significant amount of risk compared to the standard 60-40 portfolio, which just is not optimized. It's not tailored to a personal situation, and it doesn't match priorities and what people want to accomplish in life. So, I think each person deserves that, and really should have a portfolio that's customized to them. So like I wouldn't work at a place that I didn't believe with the investment philosophy and data-driven evidence-based investing. So with that, just please, like, subscribe, rate the podcast, appreciate it. Send all your questions, go ahead and email me them. I'll cover them. If there's anything, you want me to go in more detail on, and then hit, for that download, go ahead and hit the download. You'll be able to, see the 5 strategies that really helped me the most and really added to my net worth once I was done playing. And because there's still a lot of good strategies out there for those retired guys that are done playing. So I'll see you next time. The information in this podcast is educational and general in nature and does not take into consideration the listener's personal circumstances. Therefore, it is not intended to be a substitute for specific individualized financial, legal, or tax advice. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a final decision.